GoDaddy priced its IPO at $20 a share yesterday, becoming only the fourth tech IPO of the year. And already its shares are doing fantastically well and have enjoyed a bit of a first day pop. With me is the FT's Nicole Bullock to discuss the IPO a little bit further. So Nicole, why did it do so well? It's a fairly decent performance.
Yes, that's right. GoDaddy achieved that coveted first day pop that all IPOs want to have, up about 30%. And that's even after pricing beyond the indicated range of $17 to $19 last night. So, as you pointed out, it's kind of a rare tech IPO that we're seeing so far this year. We've only had 4. What we're seeing, interestingly, is that a lot of the big name hot tech companies are actually raising billions of dollars at very attractive valuations in the private market. So that's what you've seen, with the likes of Uber. So some observers are telling us that kind of scarcity is helping GoDaddy as well.
Do you think any other tech companies or any companies at all are going to look at this and say, well, there is demand for IPOs. Maybe we don't need to do these multi-billion-dollar private fundraisings and actually go to public markets a little bit sooner?
Well, I don't think it's really a matter of going sooner or not. I think they've been able to achieve tremendous valuations. If you're somebody like an Uber or a Pinterest, you don't need to go through the rigmarole of doing a public listing. You can actually raise that in the private market, and we've seen a lot of investors, hedge funds, as well as kind of old school mutual funds that traditionally have been big buyers in the IPO market, public IPO market, are actually doing these private transactions. So it's not really a matter of what stage they're at, and in fact, GoDaddy is not a new company. So it's just a matter of what if you've hit on the hot new thing, you can kind of decide how you want to play it, and there could be any number of reasons why you might want to do a public deal, and any number of reasons why you might want to stay private for a little bit longer.
But GoDaddy has been around for a while, like you say, but it's still not profitable. This seems to be a very common thing among tech companies. But is profitability within reach for this company, you think?
Well, it's an interesting thing in that you have a company like GoDaddy, founded in 1997, and as you point out, it hasn't been profitable, and that's certainly something that has come up in discussions in and around the IPO. And what their business is kind of not the sexiest corner of the market. They register domain names for small companies, and they've gained a tremendous amount of brand recognition through what was at the time pretty controversial advertising, a bit on the risque side. Now they've since abandoned that, but it caused enough of a stir that it helps their recognition. But as part of their pitch in going public, they've been talking in their prospectus about expanding to offer small companies a wider range of services in order to boost their online presence as well as security. So that's one area that they're hoping will be an area of growth for them. And one concern for them, for investors who bought in the IPO or are looking at it, is this is an area that has a bit of competition. So it's definitely you raise a very good point, and what we see oftentimes with IPOs is you get this tremendous interest by investors and frankly media like us on the first day, getting super excited about a big pop. But you have to see what happens, a week from now, a month from now, and certainly that will be one thing for us to watch with GoDaddy.
Yeah, it will be interesting to see if that first day pop ends up being a little bit deflated a few months down the line. Well, Nicole, thank you very much for being here.
Thank you.